example of an income statement for medical practice. It kind of shows what has come in and minus what the expenses were. And then this is a sample of your balance sheet. Pretty much the assets always should equal the liabilities plus the owner's equity. This is an example of a cash flow statement. You understand what you use cash flow for, what you've invested in, and how much cash you have at the end of the month or year. So really, one of the things that we started to do in our practice is have a rhythm, have a meeting rhythm with your accountant or your business manager or practice manager, where there's certain things that you have to keep them accountable for and also check. So on a daily basis, obviously you check your cash balance, which is key. On a weekly basis, you look at your accounts receivable and your debt owed. How much do I have and how much do I owe? That's key. And these two items are really the most important, because as you get to and you get into a habit of doing this, then the rest would come out better, because these two are tied to what you do on a monthly basis, which you look at your income statement, your balance sheet, and your cash flow statement. The same you do quarterly, and then yearly you want to do a comparison, and you compare it to how what your forecasts were on an annual basis. So the weekly financial checks really is, and this ties to your revenue cycle. You want to know how much money, who owes me money, mostly insurance companies, right? But is it 30 days? Is it 60 days? Is it 90 days? Is it 120 days? Where is my money? How long do they owe me this money? When is it due, and how long have they owed? These are key things you have to ask. Then on the other side, you look at, okay, who do I owe money? How much is it, and when is it due, and can you pay that money on time? This is usually for vendors. So all these should be tied in, and these questions you should ask on a weekly basis. So with revenue cycle, there are certain benchmarks we see, and this is from the MGMA. We know that about 60% of your money should be received within 30 days. And then another 20% will come in over 90 days, or the 30 to 90 day mark. But you have over 120 days, you see that you have close to 20% that doesn't come in unless it's chased after aggressively. We also see what the gross collection rates are, and how much your AR should stay in accounts receivable. Cash